Welcome back to another video, guys. I wanted to talk about the Sri Lankan debt crisis today, and I wanted to do it as quickly as possible and as simply as possible. It's a complicated topic, but I'll try to get through it without any jargon and as easily as possible. Now, although I currently live in London, I still hear a lot about Sri Lanka and I follow the markets quite closely. And one of the topics that I've been asked about recently is to do with what's going to happen with Sri Lankan debt. Are we in an unsustainable position? Is it a debt crisis? Are we going to be in a debt trap in the future? So in this video, we're going to go through the introduction, the problem, how we got here, how we're going to get out of this, and the conclusion along with long-term solutions as well. So recently, Sri Lanka's debt rating was downgraded by all three major rating agencies, Standard & Poor's, Fitch and Moody's. And this was to do with the weakening position of its finances and its ability to pay back its external debt, particularly to do with coronavirus-related reductions in its income that it receives from things like tourism. And we're going to get to that at a later point in the video. So in very basic terms, the problem is this. Sri Lanka is an economy of around 84 billion US dollars in size in terms of its GDP. We have about 23.2 billion dollars worth of debt, foreign debt that we need to pay back, and every year we have a current account deficit of 1.8 billion dollars, which means that we end up spending more foreign currency importing goods than we do earning foreign currency by exporting goods. Now that $23.2 billion debt load that we have needs to be paid between 2021 and 2025, and that amounts to around 4 billion or 4.5 billion that needs to be paid in foreign debt repayments every single year. So there's a lot of numbers to kind of get your head around it. It's important to think of it in terms of things that we understand. So imagine you wanted to buy a car and you don't have enough money to buy the car from this year's income. You haven't made enough money to buy that car. So you have two options, right? You can either borrow money or you can reach into your savings. And this is essentially the problem that the government is in. The government needs to either reach into its savings, which are its FX reserves, about 5.9 billion left as of October last year, or it can borrow more money. So in terms of the numbers, it's this. We need $4 billion every year to repay our debt. We lose 1.8 billion every year in our trade activities with other countries, and we only have $5.9 billion in reserve. So this is clearly a sort of unsustainable scenario we're in. So we can't rely on our savings. So again, the next option is to borrow, right? And there's only two people that are willing to lend us money, and that's the US and China. And we'll get into why that is. So moving on to the next point of this video, how did we even get here? So I'm going to put a graph somewhere which shows the foreign debt trending over time in Sri Lanka. And as you can see, in 1989, around that period, we had around 62% of foreign debt to GDP, which is quite high. And so what you can see is that this is not new to us. You know, we've had high foreign debt before. We've managed to reduce it, and it's risen now after 2014 because we've started issuing more international sovereign bonds, ISBs, and we also have a lower economic growth rate since 2014. So because of that, our foreign debt has increased after 2014, but this is not new. Sri Lanka has had foreign debt for a while. So what's changed now in 2021? Why are we worried suddenly about sort of high foreign debt to GDP ratios and things like that? Why is it a crisis now? This problem is to do with two branches broadly. The first is the change in the debt structure in the country, and the second is the change in the foreign exchange position of the country. So let's tackle the first point, the change in the debt structure. In like the 90s, when we had high debt to GDP ratios, this debt was fundamentally different to the debt that we have now, and that's because most of that debt was concessionary loans, and concessionary loans are loans provided to usually poorer countries that have sort of more lenient conditions. So a concessionary loan might be provided by the World Bank, the Asian Development Bank, for example, and this might have an interest rate of less than 1% and can be paid between 25 and 30 years, a long time to pay it back and not very expensive. But ever since Sri Lanka was upgraded to a middle income country, I think around 2009 or 2010, the cost of debt, so we no longer have access to these concessionary loans. So we have to reach out to the international capital markets using ISB, so international sovereign bonds. We need to issue bonds to the international capital markets to actually borrow money now. And this is more expensive. You need to pay back these loans between 5 and 10 years, and more than 6% interest rates, so more expensive, and you have to pay it back quicker. So it's much stricter loans that we have now. So while we have seen high debt to GDP ratios in the past, you can't compare it to what we are in right now, because the composition of that debt and the fundamentals, the dynamics behind this debt is completely different. And the second branch to this problem is the foreign currency position of the country and how that's changed recently. So there's 3 branches to this as well. Sorry for so many branches, but the first branch is to do with the fact that we no longer want to accept IMF money because of conditions attached to it. The second is that we can no longer rely on ISB's international borrowing, international sovereign bonds to keep on getting more loans and paying debt, because now that our credit rating has been downgraded, the risk premium of our country is higher, which means we need to pay a higher interest rate. It becomes more expensive to borrow when we become a riskier country. So that option's already also gone. And the third option is that we got a lot of our foreign currency inflows from tourism. So around 20% of our foreign currency income comes from tourism, and because of the pandemic, that tourism income has reduced, and because of that, now we are in a sort of a very bad position in terms of our ability to pay back our debt. So number 4 is how do we really get out of this problem? And there's 2 options for us. We can either borrow money from the US or we can borrow money from China. If we borrow money from the US, this comes with lots of conditions, like you need to cut fiscal expenditure, you need to increase foreign direct investment, you need to increase transparency in Sri Lanka. And we don't, the Sri Lankan government doesn't really want to be subject to all those conditions. If we reach out to China and get funding from China, we might face retaliation from the US in the form of trade sanctions and losing trade benefits. We've seen this in countries like Iran and Qatar. That retaliation might be bad for the economy as well. So the direction that the government is going right now is to accept the money from China, which is on par with what's going on right now, because we already have about $5 billion in debt to China, and $500 million last March to help with our coronavirus recovery efforts from China. There's also a $1.5 billion currency swap facility being arranged by the People's Bank of China for Sri Lanka to sort of restore its foreign currency reserves. All of this is the direction that we're trending at, but this might cause retaliation from the US, as mentioned earlier. Whether this will lead to a debt trap, as most people seem to suggest, with regards to China, this is yet to be seen, but given all the options we have, this is the course of action that the government seems to be going with. Standard & Poor's expects the Sri Lankan economy to decline by 5.3% in 2020 once those numbers comes out, and this year in 2021 we are expected to have a recovery of about 4.1% with that sort of post-COVID recovery of the economy. And this leads us on to the final point, which is the conclusion and the long-term solutions for the country. As you can see, the problem is quite complex. There's a lot of moving parts, but overall one thing stands universal, and it's that the government, in order to get out of this over the long term, needs to exercise some sort of fiscal responsibility, basically spend less, and also manage these international tensions as well, because these are also very real risks to the country moving forward. But if we're thinking very long term and how to sort of improve the country as a whole, my personal view is that the Sri Lankan debt crisis is not so much to do with foreign borrowing. I mean, yeah, that's true. We have borrowed a lot from abroad, but it's also to do with structural problems in the economy. We need to improve our trade balance. We need to start exporting more and sort of address that. And we need to improve our tax revenues. We need to improve our foreign direct investment. So we need to try and encourage more investment in the country as well. Once we start improving these structural issues in the economy, I believe that we would be at a much better place to address these foreign currency debt issues over the very long term as well. Well, thanks so much for watching, guys. I hope you found this video informative. My initial inspiration for this video came from the fact that I was looking for material on the Sri Lankan debt crisis on YouTube for my own research, and I couldn't find anything. So I was thinking, yeah, might as well. My background's in economics. I enjoy this stuff, so might as well make a video on this. So let me know if you guys enjoy these kind of content too. I've received some great feedback about the previous videos, and I want to get better and better with each video. So thank you so much for that, and continue to do that. I really appreciate that, and I'll see you in the next video.